Hello and welcome back to Trading Strategy Testing channel. Here we test the most common trading strategies to see how successful they could be and whether you should follow them while trading your hard-earned money. All the strategies will be tested 100 times so we can see how much money we could make or lose at the end. For a better risk management, we will be using a 1.5 risk to reward ratio, which means for every $1 risked, we could either make $1.5 as a profit or lose $1 if the trade is not successful. Always remember that without proper knowledge about risk management, profitable trading is almost impossible. Our starting capital is $1,000 and we will be trading Euro USD since it is the most traded pair in the market. Before we start, please like and subscribe to our channel in order to encourage us making more testing content, and don't forget to hit the bell icon so you won't miss any new video in future. Today we will test the Moving Average Convergence Divergence (MACD), which is a popular technical analysis indicator that aims to identify changes in the price momentum. The MACD collects data from different moving averages to help traders identify possible opportunities around support and resistance levels. The default MACD indicator consists of the blue MACD line, the 9 periods red signal line, as well as the zero level. The MACD zero level is extremely important as it helps us anticipating the next price movement. When the two lines are below the MACD zero line, we will consider buying as soon as the MACD line crosses above the signal line. On the other hand, when the two lines are above the MACD zero line, we will go short as soon as the MACD line crosses below the signal line. In order to double confirm our entry point, we will use the 200 exponential moving average to define the direction of the trend. We will only go long when the price is above the 200 EMA and go short when the price is below it. Trading with the trend is the best option to follow. You might end up making some significant gains if you ride a consistent trend momentum. Let's start back testing the strategy. We will choose to trade 2 mini lots for the sake of simplifying our test. The results will be announced at the end of the video, so stay tuned. We will speed up the video. Feel free to reduce the speed if you wish to follow each single trade. While you are waiting for the result, consider subscribing to our channel so you won't miss any future strategy testing. Choosing the right time frame is essential when you are backtesting a strategy. Many strategies work perfectly on certain timeframes but fail completely on others. MACD strategy works best on high time frame, starting from 15 minutes and above. If you try the strategy on smaller time frames, you might encounter many false entry signals. Choosing the right time frame is essential when you are backtesting a strategy. Many strategies work perfectly on certain time frames but fail completely on others. MACD strategy works best on high time frame, starting from 15 minutes and above. If you try the strategy on smaller time frames, you might encounter many false entry signals. Risk management is key to trading. Every trader makes losing trades sometimes. But good traders respect and manage their risks. You must be able to manage your risk and cut losses so you can continue to trade. Managing risk also means protecting your capital. It's important to not let a bad trade drain your account. There are several ways to protect your trades from unexpected changes in the market. Protect your trade from rapid changes in the market by using stop losses. Stop loss orders are a handy tool to protect your trades when prices move against you. You can calculate in advance the maximum loss you are willing to take per trade in case prices move in the opposite direction. This will prevent you from losing more money. Stop losses help prevent larger losses from occurring in a quickly changing market. Stop losses are a great tool for risk management. This tool is offered by most trading platforms. Take profit orders work in much the same way as a stop loss order. The key difference is that a take profit order automatically stops your trade at a preset level to make a profit. If you want us to test any strategy in particular, feel free to let us know in the comment section. Forex risk management comprises individual actions that allow traders to protect against the downside of a trade. More risk means higher chance of sizable returns, but also a greater chance of significant losses. Therefore, being able to manage the levels of risk to minimize loss while maximizing gains is a key skill for any trader to have. Selecting the right position size, or the number of lots you take on a trade, is important as the right size will both protect your account and maximize opportunities. To select your position size, you need to work out your stop placement, determine your risk percentage, and evaluate your pip cost and lot size. Using stop-loss orders which are placed to close a trade when a specific price is reached is another key concept to understand for effective risk management in Forex trading. Knowing the point in advance at which you want to exit a position means you can prevent potentially significant losses. Traders should use stops and also limits to enforce a risk-reward ratio of 1 to 1 or higher. For 1 to 1, this means you are risking $1 to potentially make $1. Place a stop and a limit on each trade, ensuring that the limit is at least as far away from current market price as your anticipated stop level. Feel free to share with me your favorite strategy or indicator in the comments section so I could test it for 100 times. It is important to keep your emotions in check when trading, particularly your level of stress. Make sure you have a clear head and are making informed, rational decisions. Reduce your stress level by finding the cause of your stress and either removing it or reducing its impact on you. This is easier said than done, especially after a spell of losses, but it can prove to be the difference between a successful trader and an unsuccessful one. Risk management will help you in identifying potential risks and avoiding them. No list of trading tips or tricks would be complete without this one. As with most things in life, you are very unlikely to be a successful Forex trader straight away. Continued trading practice is the only way to achieve those top results on a consistent basis. Fortunately for you, with a free and easy-to-use demo account, you don't have to lose money whilst learning the basics. Another of our Forex tips to follow is to keep an analysis of your trading activity in a journal. Don't just analyze the trades and the patterns themselves, but also the thinking, assumptions and information behind your decisions to make those trades. When reviewing your work, constantly ask yourself questions about your decision-making. There is no Forex trading trick or secret that will ensure constant success. It is important that you accept the risk of failure involved with every trade you make. You will not profit from every decision and you shouldn't be fooled by any article or advertisement which tells you differently. Be realistic with your targets and goals. One particularly important Forex market tip to follow is to learn about trends, how to spot them, and how to use them to your advantage. We don't recommend jumping on the bandwagon every time you spot a trend, but completely ignoring them is a recipe for disaster. Spotting trends enables you to trade proactively instead of simply reacting to events after they happen.
A few minutes later.
We have just finished testing the MACD indicator for 100 times. The entire process took around 135 minutes. It is always recommended for new traders to test their new strategies for at least 100 times. The backtest allows traders to optimize their strategy and practice it for a better response once trading it with a real account. I personally backtested my current strategy for over 1,000 times before I started trading it in my real account. Feel free to like and subscribe to this channel as I am going to share it on this channel soon. Now, let's look at our backtesting results. We have tested the MACD crossover strategy on the Euro-USD pair for 100 times. We have made a total profit of $427.4. The success rate of the strategy is around 61%, which means for every 10 trades made, 6 of them will end up hitting the take profit point. Let me know if you want to see another video where I analyze the losing trades to improve the strategy even more. Thank you for watching and feel free to watch the other strategy testing videos on our channel. See you soon and happy trading.